day all. Ira Epstein of Linn & Associates with your metals market wrap-up, and this wrap-up is for Tuesday, the 21st of April, 2020. And we're getting on to the 545 zone. You know, I keep thinking about it, how our lives have changed. It's April 21st. I know I've been housebound for 3 weeks. I don't know about all of you, but I'm sure most of you are too. Some people are out. Some of the states are going to let people out this weekend. I know there's 9 states that before May 1st are very serious about lifting their restrictions. They're going to open barbershops in some states, marinas in others. Beaches have opened. Stores are opening of certain sizes. I don't know how it'll all work, but we can't stay the way we are, just locked in. Ideally, we should until we've beaten this COVID. The problem is people are people, okay? And I get it. Not knocking it. I fully get it. Now, in the metal markets, the gold market made a successful test today of its 18-day average of closes. I consider that important. When the market lost its embedded reading, and we'll get to that in a second, the goal is to get back to the 18-day average. It's something I figured out many years ago. I see how it plays out. It can take time. When it takes time, that average has a chance from being low to sometimes move up to prices. But you had a heck of a break in this market, and today, I think, may have culminated it. Dollar up again. Market's petrified of what happened in oil. We know that. Oil prices tonight, a little bit of a rebound. Hard to believe gasoline prices are this cheap, but they are. And the funny part is the natural gas is the market probably not going to be under that much pressure. The reason? They're going to be capping wells, not producing as much. There won't be as much nat gas in the supply chain, and that can change things purely because we've been knocked out of the game. And the president's going to talk about it and what can he do to help these people. The Texas Commission today did not help the Texans in terms of capping production. And I don't know that they should. I think the laws of supply and demand take care of things. When we look at the gold on a weekly basis, we're in a correction. Okay, that's all it is, a correction. You peaked out. You've been setting back. For the week, you're down $11, and you peaked out, if you take a look with me, you were at $1736.20, and from that high settlement, you came down to $1689, now you're $1678. You've had a break. When we take a look at the chart action, it's dramatic. That's the only thing you can say. It's so big, I don't want to put it on one chart because then I got to snake everything together. So I'm going to keep the current action from this break low to that rally high because that's the most important ones at work right now. What we have is a pattern, and this is it without the swing line. When you use the swing line, and this swing line study is available in all of our charting software, different packages. Now we have different levels, but most of them will have a swing line in them. So if you haven't tried our charting software, I think you should. I wrote this program and love it. It tells me a lot. You don't even need this current action. You have lower highs, lower lows. You're out of an uptrend. So you had higher lows, higher highs. And when you broke through this low, right here, that one, that broke the pattern, and now you're in a corrective mode. So this is what the market's been doing, okay? We put on the chart the 18-day average of closes. I'm going to come back. You're all the way up there, you lose it. You don't have to just come back to this one. But when the slow stochastic reading changes its character from being embedded or locked into a trend and loses it, markets often go to the closest major moving average. And in the case of gold, the 100-day is here, 200's here. So the 18 is the one. And what did you do? You came down, you challenged it, and you held it on the first break. Doesn't mean anything. The pattern is still one of the swing lines down. The bias is up, though, because you're over the 18-day average. We hit the upper Bollinger Band back here, and we slid through that, no question about it. And then the bear trend began on taking out that low. But more important to it, you lost the embedded reading right back here. When you lose that reading, if you're long, you're hoping the market will come back up, because often it does. In the case here, it didn't, unfortunately. And you get caught in these trades, but you have to understand you're probably going lower. Get out of Dodge while you can. And that's what happened. So now we're at a point where the market has worked off what it had to do in the slow stochastic. When you have an embedded reading and you lose it, you typically move from bullish embedded to overbought. Readings under 80 and above 70. These legs have to get under 70 to get away from that, and you tell me what you've done. You've effectively done it. So you have a market that while the momentum's pointing down, it's no longer in overbought territory. The bias is up and the trend is down. You've hit a target, and now the market has to decide what to do with it. Silver, on the other hand, and we'll get to it, is losing to gold, and it popped back over an important number today. Everything was fine until this today. And when it closed over that puts silver in a very weak position and weaker tonight. In the silver, when you lost the embedded reading, and that's where you lost it. It's so hard to say you should be going short, especially if you get a bounce, and you got the bounce. Gold didn't offer it that way. You got the bounce. That is where often I teach. It's called a lost embedded slow stochastic trade. You're looking for price now in the 18-day average to come together. It's the only instance I know where you can be short over the 18-day average with that as your goal, the closest moving average. And sometimes it's a combination of that average coming up as price even stalls. And you were doing that, and today you finally got to the number. Believe me, it's a heart attack trade when you're in it, because you know you're fighting the overall bias of the market. But now you've got that. Are we trending? No, no, no. You've got a higher high, lower low pattern. And notice how the market's trying to get back to that 18-day average to hang there. It could go lower, but you're not in a trend. In the copper market, you stepped out of the trend here. The first two attacks of the upper Bollinger Band ended miserably. Now, obviously, copper's waiting for American factories to come online to make sure that in China, the factories that have reopened don't get new cases of COVID-19. Europe is going to try to get their factories online. So it may have seen that this $2 level's a very important low, may not be seen again. Yet another round of COVID, when it comes back, all hands, forget that. Now you got a different scenario unless we have a treatment at that time. In the platinum market, platinum fell today, got hit hard. One of the reasons, they need car factories to come back. You know, platinum and palladium, the massive usage of these two is what? Automobiles. So that's what these two are looking at. And what the market did is it owed this. Here too, you lost the embedded reading. I'm looking for the 18-day average of closes. I know where the stop should be, and I'm not going to give it to you. I do that in my morning subscriber video. And I'm looking for this market. Can it get down to that number? Again, the stop won't change. Boom. Today was the day where I think it hit its downside. It is in a bearish trend here, especially if prices close under the 18-day average. It can work lower. 693 is a possibility. But you hit the first number, that line in the sand, and often the market likes to stall there. On the other hand, this is a very different picture. Remember I told you, you're narrowing in so much, something's going to happen, and you're coming out of a big sideways action formation. At this point yesterday, the bears were in control. Lower highs, watch, with today, the lower lows. And it just slid through everything. It could easily climb back into those Bollinger Bands. It's not embedded. It is not quite oversold. You still have both numbers over 30. So rallies back there could be very interesting. To break this trend, you got to get over 2159, but you have a top in place in this market. And until this market can get through that, I think you approach this market from the bearish side, not the bullish side. And it's been a long time since I said that. In the dollar index, as we take a look, you've got a pattern of higher lows, higher highs. I said yesterday, which way is this going to break out? If it got down under 99.66, I'm looking for these numbers. Gets over 139, I'm looking for the upper Bollinger Band. And that's what seems to be happening. So at this point, I think the dollar index is still in an uptrend. I think the target's there. The stop would have to be at 99.66. And if that's taken out, it doesn't suddenly turn bearish. It would just go into a neutral status. For those of you that are trading, be it the ETFs on the metal markets, TLT, silver, GDX, I cover all those. And where I cover them, and I used to cover them as you know in this video, I now really cover them in detail in my afternoon subscriber video. I do 27 at a time. I throw out the specific buy and sell recommendations, set you up for the next day's trading. They're typically posted by 5 o'clock in the afternoon. The charts will look this way. I'm not in them. Again, the whole idea here is technical analysis, some fundamentals. I talked today what the energies we're doing and so on, so I gave a lot of information on that. And the idea is confidence on chart patterns. Doesn't mean I'm going to be right. The idea is confidence. I cover all of these different ones. I'm going to have webinars. The people that get invited, obviously the subscribers first, and they fill up when I do these. I'm going to the new Zoom platform. I used to use WebEx, but I'm going to move to Zoom because the end users find it easier for them, and that's what the experience is supposed to be. So I'll be doing that very shortly. Today I was practicing, and it takes a little bit to learn something new. I was at WebEx near expert, but this is a little different. There's a cost for it, $8.95. Oh, if that turns you off, what are you watching me for? Nothing's always free. Go to your doctor, he's not free either. Then after that, you can get $16 a month for the next 30 days, no contracts. You can go month to month. Whenever you want to quit, you do. You also get our handheld application with it, so you can get quotes, charts, news. It's all coming through there, and my videos play right there as soon as I post them. You get a push notification. It's a good deal. www.iraepstein.com. Go under the word research. Hope you do this. I'm Ira. I will see you all tomorrow.